Would you be able to sustain these margins at these levels, and what would your overall outlook be for FY24 on margins?
So we've seen softening of raw material prices both in quarter 4 and quarter 1 to that extent. In fact, quarter 1 saw about a 2% kind of a deflation with respect to raw material prices. So I think the issue of margins is directly correlated in terms of how obviously the raw material prices behave as we kind of go ahead. We are seeing a certain uptick with respect to the crude prices in the recent number of days and weeks to that extent, and also a little bit of a volatility with respect to the rupee dollar kind of positioning. So I think it will all depend in terms of how these things stabilize and what is the definitive trend we see in the next about 4 to 6 weeks in terms of going forward. As of now, we are maintaining our guidance with respect to the PBDIT band of 18 to 20% in terms of what is there. That is definitive for the year in terms of going forward. We are also looking at higher advertising spends and below the line spends to really invigorate the market in quarter 2 and quarter 3 going forward. Therefore, at present, I think we are maintaining the band in terms of guidance which we have given earlier with respect to our margins.
Okay. What's the demand trend across, the various industries that you cater to, and the outlook on demand from the festive season going forward from here?
As I said, overall, from the point of view of demand, the project sales institutional business appears to be strong. I think the whole real estate sector and the construction activity, which will continue to that extent. So therefore, the whole builder business which comes in, or even from the point of view of government spending, given the oncoming general elections next year, I think some of those trends should continue, which would kind of really, continue to kind of rekindle the overall projects demand to that extent.
If you like the video, do like, comment, share and subscribe.